Good morning, my real estate mates daily update. My name is Cameron Clark. Well, it's already February, and what we thought we would do then is look back at January 2016 and give you all a summary of the inquiry received to date from our over 300 property lead generation websites. The apartment register strategy that we had last year was fantastic. We got many clients into off-market projects, and many developers were very happy with the outcome there because they had pre-sales prior to an advertising and marketing commitment. So we will continue on that way this year, and here is a summary really state by state of what the market wants. We'll start macro. So key to product design, the last year's demand of ventilation and natural light is now a given. In recent world events, of course, security now is a driving factor. Importantly, the desire to live in a boutique building, particularly for downsizers, has actually gone down to under 20 to 30 apartments. It started at this time last year at 100, mid-year was 50 to 80, went down to say 40 or 50 in fourth quarter of 2015, so that has actually substantially dropped from there. There is, though, a embrace from the local market to vertical living and in larger buildings, which was typically driven, of course, by the foreign investors. So there is a increase in demand for Fortitude Valley, for example, and Albion in Brisbane, South Bank and South Melbourne, Fisherman's Bend here in Melbourne, and Barangaroo and Blacktown and Parramatta in Sydney. First home buyers are being really restrained from their budget, 400 to 450,000. They're topping out at 500,000. So that seems to very much be a education process of the product size and location as compared to a budget. The what we would call no man's land is that could be investor, young couple or young family in that $700,000, $800,000 or $900,000 mark, currently either renting or owning an apartment, looking to move into a larger apartment or into a townhouse. And there seems to be a common theme throughout Australia, again, the affordability, that they will have to then sell their existing property to then rebuy. They don't seem to have that income to keep the two. So we do think that secondary market might have a bit of an effect of the plan market. For downsizers, there simply isn't enough product. Downsizers typically wanting 2-bed or 2-bed and a study, 2-bathroom and 1 car, or 3-bed, 2-bed and a car. Interestingly, the downsizers don't typically ask for 2 cars. But again, because they're wanting to bank some of that capital from the family home, budgets there at about 800 to 1.2, and that is the same as Brisbane and Melbourne as in Sydney. So we're finding that a lot of Sydney side downsizers there looking to then having to increase their spend. And foreign investors are seeking value and yield. So with the Aussie dollar now at circa 70 US cents, what would typically be a state investment strategy, obviously a lot of the KL Singaporean that have gone to Melbourne Uni have stuck then with the Carlton, North Melbourne, West Melbourne type suburbs, but we find that those clients on our books are now also looking to areas such as Adelaide and Perth and to Brisbane, which is interesting. So that's the macro look. State by state, we'll start off with the big kahuna, Sydney. Sydney is now purely a where can I afford to buy. They're seeking value. You know, a 1-bedroom in Sydney costs the same as a 2-bedroom in Melbourne or Brisbane or thereabouts, broadly speaking. We see an increase in owner-occupied demand in that western corridor along the train stations. Epping continues to have very strong growth, and Penrith generally has been resounding. We've had 45 inquiries for Penrith 2 to 3 bedroom products. So there you go. That Penrith wasn't even on the radar in 2015. Townhouses in the middle ring in that infill area where the buyers understand that a larger existing home on a block of land can be turned into a 4 or 6 pack of townhouses. So we see areas such as Strathfield and Greenacre coming through there with some reasonable inquiry. Melbourne is still the tale of the international buyer versus the local market. We are finding that in terms of affordability, The northern sector there through the Northcote and Preston is now moving towards Footscray, both from a first home buyer and investor market. We're finding that increasingly. We were out in the Josephs Road precinct last week. There's new restaurants going up, a lot of new infrastructure there. So Footscray has finally come of age. Again, the downsiders in that eastern corridor, finding it very hard to actually make the decision to move into that Bayside or Boulevard corridor of Flemington Road or St Kilda Road there. Very high demand Bayside again for Albert Park, St Kilda and Port Melbourne with lack of stock. We see a lot of that moving now into South Bank. South Bank in Melbourne has had a resounding resurgence from single male and female buyers, which last year again we just did not see, so that bodes well for the Fisherman's Bend precinct, we hope. House and land, we've got a lot of inquiry in the Clyde and Clyde North sector, and as well now for Plumpton and Rockbank land, as well as house and land. And I should also actually mention Doncaster there as well. Doncaster last year again was also really for the investor market, and now a lot of owner-occs are looking at Doncaster from a larger product point of view. On to Brisbane. Again, it's been the tale of north versus south. In the north, Albion, Fortitude Valley and the like. Again, we've had a lot of local buyers now inquire to live and also to invest. I think there's this common theme of embracing inner city living, and to live in the inner city now you have to live in a vertical integrated community. So that is certainly a change from last year, and of course at the south, Woolloongabba and Annerley. The Brisbane townhouse demand is moving towards the Gold Coast, so areas such as Robina, and interestingly enough, we are still getting a lot of NRAS property investment inquiry for Brisbane, even though the NRAS scheme has ended quite some time ago. So there you go, obviously chasing rental yield. Adelaide, really driven by the Adelaide Oval redevelopment and the hospital there. So we see North Terrace in particular be very popular, as well as East and South Terrace, very much turning into high-rise promenades. Similar to Melbourne, the demographic is a lot of particularly the international students that have boarded at, say a Saints or a Pembroke or PAC, then continue on to University of Adelaide or the University of South Australia. So those children are then buying up. So that is very interesting. The townhouse areas such as Bowden and St Clair, which is about 8 kilometres out of Adelaide there, I think has again had just record growth. I think they're doing about 30 a month. So very good townhouse market indeed. Perth, we've seen a slight increase. Again, though, most of it being from international purchases. Perth, as you know, is very close in terms of distance via plane to Kuala Lumpur and Singapore. The $400 million Elizabeth Quay development, which is there in the Perth CBD, which will support the local community and also the tourist population there. So that'll be good for the city there. So that's Adelaide Terrace and East Perth, and then very much so driven by the beaches. So that's City Beach and also Fremantle. The history associated with Fremantle being very popular there with the overseas buyers. So that's a quick snapshot. If you want the more in-depth report, please contact me. You'll see the contact tab there on the website. We can give you a more in-depth overview. We'd love to hear from you. And tomorrow I think we'll look more in detail at Sydney, because it is a very interesting market. So have a good day, and we'll see you tomorrow.